So as you can see, according to that analysis I've just written, as the price is above the London high, we have a fully bullish continuity on the time frames and a 3-star trend quality reversal into uptrend. And therefore, depending on how the dust settles after the ISM data, if the price remains above the London highs, we have the closing price of yesterday as a resistance that we would need to get through above the value area high. This has all been drawn in the analysis for a high probability trade, best high probability best high probability best trade setup to target higher within the context of a reversal into uptrend with all of the time frames aligned bullish. We assume the market continues with the trend. That's what we're trading. That's just to explain the thesis behind why I'd be looking for a long above the closing price. If, on the other hand, the price breaks below, the fake out low from today, so what can be regarded as support, the London low, yesterday's low, then the bias flips bearish. We will have a breakdown on the daily chart, a breakdown on the 8-hour chart, being the London lows, and we'll be targeting into the rally from this week into areas on the market where we would assume there to be liquidity, i.e., the breakout area from Tuesday. Okay, we want to be doing that while below the EMA 20, the EMA ribbon, the VWAP from Asia and London, and by the time we trade at 10 a.m. onwards, 10:15, 10:30, 11 a.m., we will also have a VWAP on the opening price of the Wall Street opening, and ideally we want to be below all of those to confirm the trend is down. Currently, the trend is up, especially while above the London highs. The market is coiled in London, so we could expect a nice parabolic move out of the coil, one way or the other. Currently, the bias is bullish while above the London highs and yesterday's highs, in line with the monthly and weekly breakout. No matter that we are at all-time highs or in the region of, this market is bullish and it can stay bullish for a considerable time. Having said that, we have non-farm payrolls coming out tomorrow. This might not go anywhere, or it may only be a nail and bail scenario, as it would be unlikely that the market will try to second guess non-farm payrolls and attract new money ahead of the non-farm payrolls. Instead, it could be a trap and stopping traders out that have shorted all-time highs, consolidating into the data for tomorrow.